principles of accounts, okay? And we are revising one of the questions in the 2025 paper, exam paper, right? So the topic is actually coming from business documents and the sales day book. All right, so I want you to get your pen and paper and let's get started. Okay, so here is the paper. Okay, so here's the paper. As you can see, let me just zoom it a bit. Okay, so here's the paper and I'll start. Okay, start. First question is, here's the first question. Section A, I've actually extracted it from section A, right? So this is from 2025 paper. Okay, should be internal or GCE. Okay, so the first question is, question 1 and 2 are compulsory. All right, okay. So write the answers in the spaces provided for each question or part of the answer. Okay, so the 1A states, state the book of primary entry or prime entry which uses the following source document. Okay, let me zoom a bit again. Okay, so receipt, which book of prime entry uses a receipt? Okay, so the book of prime entry that uses a receipt here is cash book. Okay, the cash book, and you record the receipt on the debit side of the cash book. Debit side. Okay, so the receipt is issued when money is received. Remember this, all cash received is recorded in the cash book on the debit side because it increases cash. So the examiner will ask you to say, why is that all the all the cash received is recorded on the debit side? Is because the cash is increased. All right, or it increases cash. We continue. Roman numeral 2, we have answers. Roman numeral 1. Roman numeral 2, duplicate invoice. Which book of prime entry uses duplicate invoice? Okay, and our answer here is the sales day book. Sales day book or sales journal. Okay, so the book that uses duplicate invoices is the sales day book. All right, or the sales journal. Okay, so a duplicate invoice is kept by the seller, are we together, as proof of credit sales. This is important. Okay, so these credit sales are recorded in the sales day book. I repeat, a duplicate invoice is kept by the seller as proof of credit sales. Okay, we continue. Right, the Roman numeral 3, original credit note. Which book of prime entry do we record this original credit note? Okay, the original credit note, we are recording this in what we call the purchasers returns day book. Purchasers returns day book. Okay, purchaser returns day book. That's the book that you use to record the original credit note. Are we together? The original credit note. This is where you record the original credit note, the purchaser's returns day book. So the original credit note is received by the buyer. Okay? Once the buyer receives this document, and then when goods are returned to a supplier. So original credit note is received by the buyer when goods are returned to the supplier. This is recorded in the purchaser's returns day book. All right, we continue. Roman numeral 4, duplicate credit note. Duplicate credit note. Okay, where do we record this? In our book of our prime, the prime entry books. Okay, so duplicate credit note we record in book, the book we call sales returns day book. Okay, sales returns day book. This is where we record duplicate credit note. Okay, so don't forget, a quick recap. Receipt, where you record your receipt, is a cash book on the debit side. Duplicate invoice, sales day book. Original credit note, purchases returns day book. Duplicate credit note, sales returns day book. All right, read this over and over again for you to understand whatever is happening here. All right. Okay, so we continue. Now, B, the following relates to E. Lubungachi during the month of April 2024. Okay, on 1st April, sold the following on credit to Victor Piri. So Victor Piri is a customer, and Lubungachi is a seller. All right, or rather, Victor Piri is a buyer because these goods were sold to him. So 8 boxes of pizza at 80 kwacha, all right, each. 40 bottles of Coca-Cola at 12 kwacha each, both subject to 10% trade discount. Okay, and then on April 12th, on 12th April, sold El Mvula 1 carpet at 1,700 kwacha. From the given information, you are required to prepare his sales day book. Okay, this is one of the books of prime entry. So when preparing the sales day book, we have to extract information first for us to prepare. Okay, so we extract the information. In our first step, step 1, we extract the information. Extract information. Okay, what is this information? On the 1st of April, okay, we read that Victor Piri, what happened? 8 boxes of what? Of pizza. He bought 8 boxes of pizza. How much? At 80 kwacha. Let me just do this. Let me rub this. At 80 kwacha. We're extracting the information here. At 80 kwacha. Okay, so we multiply 80 kwacha with 8 boxes. We get the total, which is how much? 640 kwacha. Okay, what else happened? 4 bottles of Coca-Cola was sold to him at how much? 12 kwacha each. And 12 by 4 bottles, how much do we get? Okay, at the time you're watching this video, make sure that you're following and you're also working out the solutions. So we are getting 48 kwacha. Okay, now we have to calculate the trade discount, the total before the discount. Okay, so we add these two. So we say total before discount. What is the total before discount? 64 kwacha. So 640 kwacha plus 48. What do we get? What's our total? Our total is 688 kwacha. So this is the total before discount. Now let's apply discount. How much discount did the owner of the business apply? We are told it's less 10%. So less 10%, 10% trade discount. Less 10% trade discount, which is given by 10% multiplied by the total 688. What we get? Okay, our total here is 10% of 68,000, I mean 688. The answer is 68.80. Okay, I hope you know how to calculate 10% of each. So 10% means of 100, then you multiply the 688 kwacha. Okay, so you multiply 10 by this and then you divide by 100. This is how we got this. This is less 10% trade discount. Okay, then what is our net amount? Okay, so we have to subtract this from the total. So net amount is found by, so we are subtracting this amount here after we have applied our trade discount from this total amount before the discount. So our calculation will look like this. Okay, so it will be 68 or 688 kwacha minus 68 kwacha 0.8 ngwe. So our total will be 69.20 ngwe. So this is the net amount. Okay, of all the transactions that happened on the on April the 1st. This was April 1st. Okay, what about 2nd of April? I mean on the 12th of April. So we say 12th, then April. If you can manage, you can do all these things in the table. This one, this is just for the sake of the tutorial. This is what I'm calculating. So this table, you can do the calculations and then add everything, all right, so that everything looks super easy. Okay, so I'm just doing this for the sake of this tutorial. All these workings are for the sake of the tutorial, so that you understand whatever is happening in the question. So on the 1st of April, what happened? Let's read what happened here on April 12th, or on 12th, sold to El Mvula one carpet at 1,700. There was no trade discount, there was nothing. So we're actually going to record this amount the way it is. Okay, so we're going to say, as accountants, we're going to say one carpet was equal to 1,700. Okay, did we have any discount? We say no discount. So we are done with extracting the information. After this, we can now prepare the sales day book. Okay, so now let's prepare the sales day book. Okay, so our sales day book, let me just use this table here. Okay, I'll write our date there. Okay, what else? Let me say details, maybe invoice number here, the invoice number, and then amount. Okay, right, so on the 1st of April, April 1st, Victor Piri. What happened? Okay, we don't have the invoice number, so we just leave it there, but you show the examiner that you know the sales day book. Okay, sales number, there's no, we have actually calculated everything, so I'm just taking the total figures. That's how simple it is when you do the calculation. So we actually record 619, this amount here, the net amount we have actually done. But in your table, if you want, you can show the net amount here. All right, you apply everything from the table. I repeat, I just did the calculation and the workings because of this tutorial. But if you can manage, you can do everything in your table, but show the examiner your cleanness, show the examiner your clarity, show the examiner that you are going to become a very good accountant. All right, so I'll get the total. This here, since I've worked out already, okay, 619.20 ngwe, the net amount. I'll write it here in red. Okay, so here there is a kwacha symbol. So I'll write 619.20. Okay. What about April 12th? What happened? April 12th, Mvula was sold a carpet. Mvula, what's our invoice number? We don't know. Or we have, but we haven't recorded. Okay, amount, there was no trade discount, so we just record the same amount, which was, okay, let me just write it here properly, which is 1,700. Okay, 1,700. Okay, then we'll just indicate here our total. Our total will be, we'll add this 619.20 plus 1,700. Punch your calculator. 1,700. Our answer is 2,319.00. Okay, sorry, not 0.00, 0.20. This 20 here comes here. So this is how you go about answering such questions. So we are done. Okay, don't forget the heading here. You can write sales day book. Okay, so this is how you do the calculation. We have answered these questions. Okay, as you can see, let me just do a quick recap. All right, for those that actually didn't understand anything. So the book of primary entry, the examiner was asking you to state the book of primary entry which uses, all right, the following as source document. Receipt. The receipt is recorded in the cash book on the debit side. All right, so a receipt is issued when money is received. You only issue a receipt when money is received, and all cash received is recorded in the cash book on the debit side. Why? Because it increases cash. Okay, we move on. Duplicate invoice. Where do we record the duplicate invoice? Which book of primary entry? Okay, the book is sales day book or sales journal. A duplicate invoice is kept by the seller as proof of credit sales. You haven't received your cash yet, okay? But you have a duplicate invoice. You as a seller, you keep it as a proof of credit sales. So these credit sales are recorded in the sales day book, okay? Number 3, original credit note. Original credit note. There's original credit note and duplicate credit note. So pay attention. Original credit note. Original credit note is recorded in the purchases returns day book. Purchases returns day book. Okay. An original credit note is received by the buyer. This document goes to the buyer when goods are returned to a supplier. When they return goods to you to say, okay, Mr. Piri, Mr. Mwanza, your goods that we bought from you are not okay, we are returning these goods. So you prepare what? An original credit note, which is given to the buyer. So original credit note is received by the buyer when goods are returned to a supplier. Okay, this is recorded in the purchases returns daybook. Original credit note. Okay, now here the duplicate credit note. Where do you record the duplicate credit note? Duplicate credit note, don't be confused. Original credit note, duplicate credit note. Duplicate credit note, you record it in the sales returns daybook. So the seller keeps the duplicate copy of a credit note when a customer returns goods. So this, you see that here the customer returns goods, there the buyer returns goods. So the seller keeps the duplicate copy of a credit note when the customer returns goods. This is recorded in the sales returns daybook. Okay, so we are done, and we did some calculations on the sales daybook. The workings were done here. You extract information. Okay, we did the calculations here. We multiplied. Okay, this is how everything is done. Okay, so we have come to the end of our revision session. Okay, make sure that you go through, and you'll be glad that you did. All right, so this has been Tutor Be Smart, and this has been my accounting or principles of accounts or accounts revision session. Thank you so much for watching and staying with me to the end of the video. It is bye for now.